Okay. All right, guys, we ready?
Uh-oh.
We're going to go ahead and call the meeting to
Hit the
order.
screen and jumped on me.
Oh, let's show you the shortcut here. If you go up to the very top here, there you go. If it goes back down like that, you can touch this, and then you touch that. You can move to whatever you want to move to.
Oh, okay. I was looking for the password
Oh,
in case it dumps on me.
yeah. You're good. Okay. Back to getting
You
started.
used to put it on the agenda.
What is it? Yeah, there you go. Okay, so we will get to call this meeting to order of the City of New Smyrna Beach Police Officers Retirement Plan, Pension Board of Trustees Quarterly Meeting. I'll do a quick roll call. Palmer Wilson. Palmer.
Palmer, are you here? Hang on.
Come on.
We can notate Palmer's here. Jason Reeve.
Here.
Ron Niebert.
Here.
Brandon Mechtel. Mike
This thing
Eisen.
doesn't want to go in.
Okay. So Brandon and Mechtel are not here, but we still have a quorum. Wait till he gets all set here.
Okay, I'm good.
You all set?
I'm all set now.
Okay, so we just did the quorum, so we have a quorum of 3, and we are moving on to public comments. Do we have any public comments? Seeing nobody in the audience, go with none. We'll move straight on to approval of the minutes for January 23rd, 2026 meeting. If anybody has any questions about those, I'd be happy to answer. Otherwise, I'll be looking for a motion to approve the January 23rd minutes as presented.
Move to approve.
Second.
Perfect. Any other discussion? All in favor?
Aye.
Aye.
Any opposed? Motion passes. Thank you. Okay, moving straight into new business. This topic is discussion of legal services. As you noticed from my memos that I sent out, Pedro Herrera left Sugarman Suskin and went to a new firm, Jones Walker. Pedro sent a letter with his intent to keep you as clients. Sugarman Suskin sent you a letter as well with their intent to keep you as clients as well, with David Robinson here being the lead attorney. So what I'm going to do right now is just give you the quick overview. So there's going to be 3 options that you're going to have, and they're listed in the form that they sent you. One is to retain Sugarman Suskin. Number 2 is to switch to Pedro Herrera and Jones Walker. And number 3 is to go out for an RFP, so that you would have bids from other people. So those are the 3 options, and what I'm going to do is just open it up to David Robinson first, let him go ahead and address you, and you can address any questions you have to him.
Great. Thank you, Troy. Good afternoon, everyone. Thanks for having me here today. So my name is David Robinson. I've been with Sugarman Susskind I'm a partner in Sugarman Susskind. I've been with the firm for 32 years. I've went to Georgetown University Law Center and then came directly down here to Florida and joined Sugarman Susskind directly out of law school, and began working in the public pension sector with Bob Sugarman. For those of you who are familiar with Bob, he's one of the founding attorneys in this practice area. So I learned from Bob. Consider that I've learned from the best. And I've been practicing now for 32 years in this field. So you've received the respective communications from our firms. Pedro's left the firm. As far as we're concerned, life goes on at Sugarman & Susskind. We've been your attorneys now, I believe, since 2017. We would like to continue to serve as your attorneys. We are certainly able to. We have a full house of attorneys who are willing to continue. And should you decide to stay with us, I'll be your primary contact. But also with me, there's Jose Javier Rodriguez, Marcus Braswell. We also just hired a young attorney a couple of years ago, Veronica Ukros, about who we're also very excited. So at Sugarman and Susskind, we've devoted our entire careers, myself, Bob Sugarman, Howard Susskind, Marcus Braswell, our entire careers to representing workers and representing the fiduciaries of the pension funds that cover workers. So that's what we do. That's all we do, and we're very proud of the work that we've done. Bob has been doing it for for over 50 years, close to 50 years, and so we've had, there's been changes before Sugarman and Susskind, but the quality of our legal services always remains the same, and that's quite simply because Bob and Howard have always had a talent for finding and retaining highly qualified, very talented attorneys, and that continues. So we're now in the process of looking for a new associate, and we don't have any doubt that we'll be able to find someone who's just as qualified as the other attorneys in the firm. We've always had a team approach at Sugarman and Susskind. You haven't seen me, for most of you, I think for all of you, this is the first time you're meeting me. But I've been involved always on all of our plans in the background. So Pedro's been the one attending meetings, but I've been involved in the plans in the background. I've done a lot of work on your plan in the past, and so I'm familiar with it. I'm familiar with the fire plan as well, and I've come to these meetings in the past as well. I think it was 2018, 2019. So familiar with New Smyrna. I enjoy coming up here. Enjoy coming to these meetings. So for me, it'd be a pleasure to take over and to be your primary contact person. We have offered, you've seen in our communication, we've offered you a 25% fee reduction. That's just quite simply to take into consideration the fact that you're not familiar with me. And so it's to give you a period during which you can, a cost-effective, risk-free way to get to know me, to see that that the level of legal services that you've been accustomed to at Sugarman and Susskind will continue. And we feel that will be in place for 2 years. At least 2 years. There's no intention to raise the fees at the end of the 2 years, and so that's 2 years that you can see that new attorney, but same level of legal services as we've always had at Sugarman and Susskind. So, of course, if at any time during those 2 years you felt in any way dissatisfied, you would have the choice, the ability to seek other legal counsel. So we hope that makes the decision easier for you. And if anyone has any questions for me, I'm happy to answer them.
How many plans are you lead counsel for?
How many plans am I lead counsel for?
Yes.
Now I think it's about 15 to 18.
Okay.
Mm-hmm.
And I would imagine for our plan, is there any like formal transition, or there's a history of any past, history of opinion or litigation or anything, any past practice by Pedro that you guys would be or are aware of?
We have the full institutional. I've not in several years now, but I attended your meetings for some time. It said, I think it was 2019, 2020. So we have the full institutional knowledge. Jessica, who was the assistant, she's still with the firm. So between myself and Jessica, we have the full institutional knowledge of the plan.
I'm good.
Okay, no other questions? Thank you, David, appreciate it.
Thank you.
We're now going to let Pedro Herrera address the board. Pedro?
Good afternoon. I know you guys are familiar with me, but Pedro Herrera, obviously formerly For the Record. So as you've heard, I did decide to leave my prior firm. Certainly was not nothing that was anticipated, not an easy decision. I had been there 22 years. My practice, as you guys are aware, is solely devoted to public pension plans. That's all that I've done for the past 22 years. For the past just about 15 years or so, I was responsible for the entire public pension practice at my old firm. Myself and Madison Levine, an associate with our prior firm, we both came over. We were responsible for really all of the public pension plan work that was performed. We were responsible for not only attending the meetings, but I would say, 99% of the work that was issued. She and I did, and frankly, we were blessed with having a great client base, and I think it just got to the point from our perspective that it was just a little bit too much. We had been needing some additional resources in terms of back office work, in terms of support for our clients, for ourselves, and after many years of trying to get that, unfortunately, I think it was just a point in time where what's the definition of insanity, right? Doing the same thing over and over again, expecting a different result. And so, the interests of my former partners, Bob Sugarman's been retired now for quite some time. Howard Susskind is almost effectively retired. I think they're both over 80. The remaining attorneys at the firm are maybe 60. And so from our perspective, it was just something where I think the life cycle was a little bit different. The business model was different, right? We felt like we needed to put more resources into the practice, into the firm to support our clients. And I think that was just the difference of opinion where my former partners thought maybe resources should be allocated elsewhere. And so rather than trying to keep spinning our wheels, it was best to move over. So we joined this firm, Jones Walker. It's a national firm, over 300 attorneys, 30 offices. Myself, Madison, excuse me, and we just had an associate accept an offer on Monday, so he should be coming over from the tax group. Probably in the next 2 weeks or so, he'll get onboarded. And I think, we're really excited to have him kind of help support us in the back office, certainly. We'll probably start bringing him over to some meetings just so he starts getting acclimated. But from your perspective and kind of what I've been telling my other former and now even current clients is that, I would continue to serve as your point of contact, your primary attorney. If I can't for some reason, or if the board prefers Madison, who in her own right, she's been the primary attorney for a number of plans for many years as well. And so, we would continue to operate in that role. Like I mentioned before, there's a difference, I think, in terms of, and you guys have attended, you've been here long enough. There's a difference in, solely dedicating your practice to this, and kind of touching on it every now and again. And while I understand my prior firm is saying that they have a number of resources, I think I would just look to what the facts are and where those resources have been, and maybe what they can do for you guys. As fiduciaries, obviously you're charged with the best interests of the plan, and so hiring a service provider, I think, is an important decision that you guys face. And so if you're deciding as fiduciaries between an attorney with or attorneys with a certain level of experience and attorneys that don't have that level of experience, if you're deciding between firms that have a number of resources and deep bench and a firm that doesn't, and obviously fees, I understand my prior firm is offering a very significant discount, well below market value for its services. And I understand fees is a strong consideration, and so I've never lost a client over fees, and so I'm happy to discuss fees with you all and agree. I'm kind of showing my hand, but whatever the board feels comfortable with in terms of fees, I'm not gonna lose a relationship because of fees. So again, I'm happy to discuss that and agree to whatever you guys feel appropriate. But I would love to continue the relationship with you guys, and any questions that you may have for me, happy to address.
So your firm isn't primarily focused on public pensions?
No. So it's a national firm. We have obviously kind of every practice group that you could probably think of, which, from my perspective, is certainly appreciated in terms of, I can still remain the subject matter expert, but if there's a litigation matter, I have teams of litigators that know all the rules and know all the filing deadlines and can guide me on the intricacies of that. If there's collection matters, same thing, right? We have a whole team of attorneys that are dedicated to collection, and so bankruptcy, tax, whatever it may be, while I can still serve as the subject matter expert, and I would remain so, I have, I don't want to say limitless resources, but a number of resources at my disposal. The purpose of my joining the firm does represent statewide pension funds at a national level. So as you guys are aware, Florida is a little bit unique in the sense that Florida law allows each local agency to kind of have its own pension fund for its employees. So in some cases, just like here, right? Police have their own plan, fire has their own plan, general employees, elected officials. Florida, Georgia, Texas, Michigan, Illinois, a few others have this kind of a model. The majority of states, however, just have, similar to FRS, one large statewide fund for its public employees. So my firm, while it does have experience in representing statewide plans as fiduciary counsel, as investment counsel, they did not really have a footprint, let's say, in the Florida public pension market, right? But that was one of the reasons I think that I ended up choosing this firm was they were really receptive to the practice area. It complements a lot of the things that the firm already does, and they've really kind of given me carte blanche in terms of allocating whatever resources I may need to not only sustain the practice that have been fortunate enough to have, but also grow it in whatever capacity we can. So since I started this process just about 2 months ago, we've met with about 51 or 52 of my prior clients, and I've been fortunate enough, about 48 or so have decided to come over, and obviously now it's the quarterly month, just like you guys. We'll be meeting with the remaining, it's about a little less than 50 of the plans that we had formerly, and we're meeting with them as well, and essentially having the same discussion, having them go through the same exercise. I know you guys all love talking to a bunch of lawyers, but so to answer your question, it's not something that my firm does currently, apart from the 48 or so funds that have joined recently, but certainly something that I think will be a pretty successful practice group for the firm.
And how large is the new department then?
So my department right now is myself, Madison, this new associate who's going to be coming on board, and then we have 2 paralegals that are working with us.
Okay. So you made the comment regarding your separation that there was things that you were asking the firm to do in terms of providing additional resources and assets to better serve the clients. So were you implying that the firm wasn't properly serving this pension fund?
No, I think to the best of my ability, I think we did we did serve the pension fund as in every capacity that you could have wanted. I just think it was not getting to the point. It was at the point, and probably had been for a little bit, where it was difficult to maintain and to sustain the practice group and ensuring that we were able to provide the best service for our clients. And there were things that Madison and I wanted to do that just we weren't able to. One of them, and I know it's not probably as significant, but one of them is hosting educational seminars for our clients, right? And so oftentimes it's difficult for you guys as trustees to get out and attend these conferences. I've found that it's easier and even more accessible to maybe have something locally, maybe invite some neighboring plans as well, We could rope Frank in, we could rope, your administrator, Troy, actuary, and put on something not only for the trustees, you guys kind of deal with this on a day-to-day basis, but even more importantly, right, maybe potentially for the members, right? And the members can kind of attend these things and see how the plan works, see who's working for the plan, right? Ask questions of the actuary directly, of Frank, of myself, of Troy, right? And potentially even the major stakeholders, right? Council members, union officials, whomever, right? And it really kind of breeds an environment where there's an openness, there's a transparency, there's an ability to kind of see, behind the curtain, so to speak, in terms of how the plan operates, what it's able to afford, and that was something that unfortunately I was not able to do before, to answer your question, but for example with my new firm, that's something that will be done, right? Or I will be proposing that it be done. So I hope that answers your question.
Okay.
A couple, if I may, just like to make a couple of corrections. First of all, neither Bob Sugarman nor Howard Susskind is over 80. Pedro knows that. And also, just in terms of the experience and resources in our firm, Bob Sugarman and I together. So Bob is not completely retired. He's still there's a number of meetings that he still attends on his own, for which he's the principal contact. And in any event, Bob is still active in the firm. He's there as a resource for me and for the other attorneys. We feel that he's a very valuable resource. He's been practicing law since 1972. And he has a wealth of knowledge, particularly in, as I said, he's one of the founding attorneys in this practice area. So we're very happy, very proud to have Bob still available to us. And between Bob and myself, we have 80 years of public pension experience. Finally, with regard to the resources of the firm, there's no lack of resources in our firm. The seminars or the local educational workshops, I've done them for other clients in the past. So, and never has the firm told me you can't do these seminars anymore. So, I just want to make those.
So if I recall, you said your firm is specifically public pensions.
So our firm, we have 3 practice areas.
Okay.
And really, we grew. At our inception, the firm was a labor law firm, both public sector and private sector labor law. And then sort of naturally from that, as has been the case for most labor law firms across the country, both public and private sector work sort of grew out of that. And Bob started that practice and grew it to well over 100 clients. And we've been doing it. We've been doing it for my entire career, which is 32 years, and Bob for many years before that. So we practice and we believe that, to answer the question, we have public sector pension, private sector pension, and public and private sector collective bargaining. I practice across all three practice areas, and I believe that gives me a complete perspective on each area. Bob practices across all 3 areas as well, as does Howard Susskind. And I know for sure that my experience in collective bargaining and my experience in the private sector pension gives me certain strengths in this field as well.
How many attorneys are in your public pension department?
So now there's myself, there's Javier Rodriguez, and Veronica Ucros.
Okay.
And Bob Sugarman, of course.
Any further questions for Pedro?
Would there be, and obviously forgive me for any ignorance on whatever, and please feel free to say not applicable or it doesn't pertain to here, just a couple things that popped into whatever, I guess, would moving over to you, would there be transition costs? Would there be anything like that with moving files, information, transitioning, anything like that? Would there be any additional incurment of costs for a switch or a move over?
No, not at all. Like I mentioned before, we've done this now over the past 2 months, 48, 49 times, and so luckily everything is really electronic, so it's just downloading files, right? So there would be no additional costs with any kind of a transition.
And I guess, whoop, sorry, I'm throwing that at you. And I guess maybe kind of for both of you, if I kind of word it right, I guess I'm assuming whatever guidance, advice, or whatever you've done for us in the past, you'll currently stand on, and then would your new firm stand on whatever you've provided us? Does that make sense, right? If you've provided us guidance, legal opinion, whatever, if something were to come up of that, am I getting across what I'm trying to say, right? If you provided us legal advice X amount ago and there's some issue pops up, is your current firm gonna back that and say, yeah, and I guess
If you
kind of
gave us,
likewise,
if you
right?
gave us bad advice and we
Yeah.
took it and it costs us money, is your new firm gonna cover any issues related to practice, or does
Yeah.
that fall back on your previous firm?
No, I mean, it would fall back on me, right, as the attorney who gave you the advice. So it would be our responsibility to cover anything like that.
Troy, did we specifically hire one attorney, or did we hire the firm?
You hired the firm.
So you mentioned we have three options: hire one, hire two, or do an RFP. Why do we have a contract with the one, and why do we not do an RFP when we're considering basically a new firm?
Right.
Granted, one of the principals from that firm is with the new firm.
Sure.
From the old firm. Why does that forego the need for an RFP?
Just because this is kind of how we set it up, so when they sent their letter and Pedro sent his letter, there must have been some kind of communication between them to kind of say, hey, listen, this is uncomfortable, it is what it is, but if we give three options, if we both of their letters gave the same three options. So we thought to bring it to
essentially
them
what happens
first.
is the Florida Bar has rules about communications that have to be sent out and what goes into those communications. So communications that you received are communications that comply with Florida Bar rules. So as I said, our position is that you don't have to make any decision at all. You have legal counsel. Pedro's made a decision to leave, but we're still here. And we would like to continue to serve you. So you don't have to make a decision, any decision. But we are obligated by the Florida Bar, and we did, through our communication, inform you that you do have a choice. Even though you're not required to make a decision, you have a choice. And you can decide to stay with us, and we hope you will. Or you could decide to go to Jones Walker or to do an RFP.
Well, let me ask this question. What if another firm had found out that Jose left and say, hey, we don't want to be part of,
Sure.
we want to be considered as part of the same consideration that you're doing now?
Right. If they had a disagreement in how this would roll out, because their memos are very similar with the three options, we assumed this was a legal standard that they had prepared based on what is standard in the state. If there was a disagreement on how they wanted to roll this out and they completely disagreed, we would probably have gotten another opinion. Our legal probably would have gotten involved, to come up with it. But because it appeared that they, were being professional, they were giving, the same options, there wasn't any, anything different. It appeared, that they had discussed this and it probably fit with their legal standards, what their requirements are. So this is what we pitched to all of our boards. No other board has had, an issue with it, and it's kind of worked itself out. Every board has chosen one of the three in different variations, but that's kind of how it's worked out.
Okay.
So, but like I said, they are still your firm as of right this minute. Until you replace them, Sugarman Suskin is your legal counsel. So that's why, we're here today, because there is a transition and there is a, request. That's why we brought it to you. But those are your three options. You could feel free to discuss this amongst yourself. If you feel like you'd be, rather the attorney step out for a moment, that's your option.
Public meeting, we can't kick
No,
them
you
out.
can't, you can't, but we'll voluntarily step out if you.
Yeah, I
if
was
you-
gonna say, right, I'm
That's
not kicking them
I'm
out.
not gonna say anything that, It's public record anyway,
Right.
so who cares?
That's right.
Palmer, you got any questions?
Yeah, I looked at both the original letter and then what Pedro's had sent, the pamphlet. Which, one of the things struck me was, right now, 16 cities in Volusia County, and 7 of them, we would be 8, so we would be half of the cities would be with them. Now, I don't know where the other cities are, but it looked like a significant number of cities within Volusia County were with Pedro's New Farm. So that's one observation. Second observation, I've been here a little over 2 years now, I guess, pushing 3. I've always found Pedro's advice to be pretty clear. And I go back to that very confusing disability hearing that we had, and there was a lot of advice that was given back and forth, much like a trial. But I came away with that each time we had asked Pedro a question, I think with maybe one exception. He didn't do the lawyer dance. He gave us a straight answer and said, you can do this or you can do that. And I appreciated that. So I'm more inclined, or I feel comfortable with Pedro based on his past experience. Nothing against Mr. Robinson, but I haven't dealt with him. So it's more of a comfortability. It's kind of like I'm with this doctor for 50 years and some new doctor comes over, I'm more inclined to stay with them because I have a relationship and understanding. And while the relationship is with the company, the relationship's been with Pedro ever since I've been here. Jason, you've been here longer, so I don't know how long Pedro was actually doing this, but I've seen him, there. As I understand his comment, he said that he would do something along the same order that they are offering with the discount.
He didn't commit to that. He said he'd be open to discussions.
I mentioned, I'm showing my cards. I said I'm going to agree to whatever you guys tell me. So, but yes, I'm happy. Again, fees. Obviously, they're important, and it's an important consideration. But I'm not going to lose, a 10, 12-year relationship because of a few $1,000s. So.
Yeah. So nebulous or not, okay. I think you get back to the issue. It's kind of like my example of the doctor. Are you more comfortable with who you have and who you've seen face to face than somebody that you haven't seen and haven't seen face to face? So I think there's some measure lending over there. To me, it's irrelevant whether these other gentlemen are still around or anything else. The key thing to me is who's providing the legal advice. So that's kind of where I'm at on it.
Well, I think it's an important decision, and I think I would rather have the input of our other 2 members. So I'd be willing to maintain our current firm, but allow a reconsideration of this matter at our next quarterly meeting.
Till the next meeting?
When we have full membership.
Yeah.
I'd like.
Yeah, I don't disagree with what you're saying, but I would also argue that, and obviously not put in anything, whatever, but you might have a relationship with your example of a doctor, right? But if, that doctor goes to a not so well doctor office, right? That's maybe doesn't have a good reputation, that might not mean much, right? So I don't know if there might be some due diligence to, look into the firm a little, just for self-assurance. Not that I'm doubting anything, of course, right? And I think to your point too, it's only 3 of us. There's
Correct.
2 other members not here that should probably have a fair input on making a pretty big decision like this.
And that's why we postponed it from the last one, because of that. So I was hoping we'd have more members here. So I'm not opposed to that either.
Well, Meckel should be back for the next one. He'll be back in
Yeah, I was
town,
gonna say,
think,
there's
next
no
week.
guarantee that we're gonna get 5 people here, but.
Yeah,
we
well,
obviously
Meckel
would
for
like
sure
to.
should be back by next week, so I think he's, he should be here for the next one for sure.
So I have no problem with that.
I would move to table this item to the next meeting and allow the two firms to present again to the board.
I'll second it.
Any other discussion? All in favor?
Aye.
Any opposed? Okay, motion passes to table this until next meeting. Sugarman Susskind will remain your attorney until time when they're relieved.
Thank you, guys.
Thanks, Pedro.
I appreciate it. Thank you.
Okay, thank you guys for that. I appreciate it, and I will put that on the next meeting. We will move straight into the next topic, which was election of officers. For the same reason that we didn't make a decision now, I don't believe it's appropriate to make a decision on election of officers if we don't, I'd like to have at least 4 here, let's put it that way. I think it's,
I'll make a motion to table it to the next meeting.
okay,
Second?
perfect. Any other discussion? All in favor?
Aye.
Any opposed? Okay, so we will go ahead and table election of officers as well.
Or are we
Alright,
still replacing, we still. waiting
Mark,
to vote
yeah,
on
so,
Mark and- oh,
right,
okay.
so we still have Palmer as the
Oh, yeah.
secretary, but we
Alright.
haven't, it's been 2 meetings in a row that we
Okay,
haven't been able to
yeah.
get enough
Alright.
people, you know, so we tried to keep doing this, so at some point, we're gonna have to make some decisions,
Yeah.
you know? I mean, if
No,
it's
very
3, it's
true.
3, you know? But we will keep trying. So we will move straight down into reports, and we will go to Burgess Chambers and Frank One.
Great. Well,
Page 8, sorry.
as Ron suggested, it's going to be a very lively meeting, but I do have some good news to share with everybody. So let's start on page 10 of your tablet, where we did provide a market perspective this quarter. And Troy, I think you may need a system with the password again.
Yep, I got you, no problem. We had to, because of cybersecurity
I got
and
it.
everything, we now have 2 passwords.
Oh.
It's really a disaster, but it's just our times, we have to continue to keep up with what's going on out there. So I'm just
I finally figured the secret out.
Well, just when you figure it out, now we have two
Yeah.
passwords instead
Thanks.
of 1.
Starting with page 10 of the PDF.
10?
Yeah, page 10 of the PDF.
622?
32543.
Okay.
Oh, Jupiter Police Department, ask them what my 2 ID numbers are. That's what they are.
All right,
Okay,
everyone
Frank,
good?
you're up.
Yeah, go
So
ahead.
page 10 highlights a market perspective that we wrote about, and this is really just a quick history back in time that suggests that we've gone through periods of uncertainty, similar but not exactly the same as the situation we're in today. And we have gone through different oil shocks in the past. And if we think about these coincidences, that we find a way out. And by the time we find our way out, the mark is usually higher. So as we think about all these events, unfortunately, the U.S. has a lot of controlling stake in these situations, and the U.S. position in terms of the dollar, the influence on inflation, and the influence on the result actually results a year post the events themselves to be a higher markets. So generally speaking, despite the uncertainty that we're facing now, if we look forward, assuming that we still have stable economic conditions, we can actually expect the market to move higher. Interestingly enough, through the Iran crisis, as we've experienced in the first quarter, we've already gotten out of this mini crisis that we were in. You know, for example, in the first quarter, we saw U.S. markets sell off anywhere between 5 to 10%. But if you look at the S&P index today, it's actually up 5%. Okay, so even if we think about where we've been in the last 3 months, under a strong economic backdrop, people gravitate towards, are we selling because we're just selling on the news, or are we selling because economic conditions has deteriorated? And just this morning, we saw the U.S. GDP numbers come out, and those were actually plus 2%. So again, under a strong economic backdrop, that's what helped us to remain relatively resilient. So as we think about your report ending March 31st, that has actually become stale. So further, I'm going to provide some updates for your plan and talk about some of the positive news that's been result of numbers post March 31st. So having that said, I'm going to lead your attention now to page 18 of the the PDF. So if you recall, when my colleague and I came last year, we did talk about the idea the U.S. stock market has become slightly more expensive than they were in the past, namely the Magnificent Seven or the AI-driven stocks. So on page 18 of the PDF, you'll see a grouping of 5 bar charts. And each of those grouping of bar charts suggests a fiscal year or a year starting in 2022 and fast forward to the most recent period, March 2026. And throughout that time, I think you remember that everyone on the same page there? I see some confusion.
Is it 18 of your document or 18
PDF.
of the whole
Of
thing?
the whole thing.
Okay,
9 of your document, page 9 of your document.
So that would be page 9 of our document.
got it.
Page 18 out of 52 or page 9 of our
Got it.
report. So the good news is because we recognized some market risk last year, we actually rebalanced international small cap and also bonds. And we also took the state monies and the city contributions, we rebalanced those assets into bonds. So if we look at where our bond proceeds were, they were actually at the highest in the last 5 years. And if you actually look at where our domestic equities are, they're actually close to where we were just 5 years ago. So we started trimming our positions about 6 to 7 months ago, recognizing that there were some expensiveness in the U.S. stock market. So then as we think about where we trimmed from, we actually trimmed out of an area called QQQ. So on page 19 of the PDF, so 19 out of 52, or our page report, page 10, so either 19 or 10, where you'll see a sequence of numbers, right? So if you think about where we trimmed from, I think that's most notable, was actually selling out of QQQ, where over the last 2 years, it had returned about 15% per year. So the grouping under the QQQ index, right, it's largely represented by tech companies. And coincidentally, where we sold off the most, right, happens to be the area where it actually got hurt the most in the first quarter. So we were able to avoid some of that loss. We started with a $700,000 investment. It grew to over $1 million. So then we've trimmed it back by way of haircutting the profits. But now, as we look at your report, even though it was down 5.9% for the first quarter, fast forward to today, year to date, the QQQ index is actually up 8.9%. So it's swung more than 13 to 14% just in the last 4.5 or 5 months period. So what an incredible ride, right, as we noted. But again, I think this suggests that as long-term investors, if we could believe that the economy remains intact, a lot of other things on the side are just noises, right? So if we remain to be long-term focused and risk focused, then we can actually tend to focus on the important picture. And for us, the important picture for now is actually risk management, okay? So again, as we mentioned before, despite having a loss of 5.9%, one of the worst performers in the same category, if you look at it today, that number has completely flipped. So for the quarter to date, you can actually say, hey, in our second quarter of the calendar year, this investment is up 13% since the beginning of this report. So very, very good news as we witness a market turnaround, especially during the second quarter. Now, what's equally important to mention on the same slide is the fact that over the last 3 years, it did not pay dividends to be invested in a diversified portfolio. For the first time in a long time, we saw that if you're a diversified investor, you actually did better than being more concentrated, which is against all kind of common sense. But if you start to think about this fourth line below domestic equity and look at the SPDR S&P 600 small cap index, you'll see that the small cap investments were actually positive in a time where the S&P 500 index was down 4.4%, the small cap was actually up nearly 4%, providing you with the benefit of diversification. So why did the small caps gain during the latest quarter? It's really based on the idea that the interest rates could fall lower. Okay, so starting last year, we saw three rate cuts, and those rate cuts suggest that, hey, that inflation's been tamed and inflation's under control in the U.S., and as a result, if we lower rates, which company stands to benefit? Those are the small to the medium-sized companies. So for the first time in a long time, we actually saw that your diversification in different portfolios benefited this portfolio. And then further, we diversified into international by way of increasing some exposure in the Fidelity International Index, which is made up of mostly developed countries. And those developed countries produced a gain of 1% during this past quarter. The difference between Fidelity International and the Euro-Pacific, or UPAC, is that UPAC owns about 25% in emerging markets. And the latest quarter emerging markets did not suffer very well. So relatively speaking, not all international made sense, but collectively, our exposure in the developed space, where we have actually added more money to over the last year, has actually proven to be fairly effective as a further diversification in the portfolio. And then lastly, the diversifier that helped our portfolio was actually bonds, right? So aside from stocks and bonds, we have real estate. So real estate is something that we talked about with a bit of enthusiasm because we have seen a rebound in commercial real estate. And as a result, that's reflected in the latest quarter, and your assets with American Realty collectively was up 1.1%. Again, help you to offsetting those losses that you may have otherwise endured through stocks and bonds. It was a hard quarter because there were very little places to hide, but for your portfolio, fortunately, those that's outside of traditional S&P 500 or the core bond index actually performed very well. So all in all, as we think about your report, that minus 2% seems to be obsolete. But now, as we look at the new quarter, your plan is actually fluctuating right around the 3% mark. So your quarter to date, you can expect a rate of return just around plus 3%. And again, I'm happy to report that so far, your fiscal year to date is shaping up to be positive as well. So that said, focusing on risk management as I promised. So coming back to page 7, or page 16 of the PDF, or page 7 of our report. So if you look on page 7 and focus in on where we have the largest overweight, that largest overweight remains to be domestic equity. And what's interesting is that we've been watching the earnings reports very carefully in the last couple of days. The earnings, however, has been incredibly mixed. So that actually does give us a little bit of worry that this V-shaped rebound is coming in a little fast. So just as I mentioned that the QQQ investment you had was down 5% and suddenly it's up 13%, I think that 13% may be overbought. So as we think about the latest round of earnings that were announced, Meta or Facebook as an example, had terrible earnings as a result of that. Whereas in the counterpart, Google had mixed reviews. Microsoft, mediocre reviews. But more importantly, what we saw in the latest quarter were not the kind of the Mag 7 related tech, but software companies are all suffering tremendously. So where the technology stocks have roared over the last 3 years, think about companies like Salesforce. Salesforce is a platform that's utilized by all major S&P 500 companies. And what they've understood is that I could actually build my own through AI for free. And I could actually create the same software using today's AI technology and not pay a subscription. So consequently, the software makers like Salesforce is down close to 25 to 30% this year.
How do they avoid copyright issues?
So I think they do it slightly different,
Okay.
but they don't write the same codes. So because there are kind of similar use, but different codes, they're getting away with it, right?
Well, War and Peace with different words is still War and Peace.
Sure. But I think the fear does suggest, right, that the cost of these should go down drastically.
Okay.
And I think the fear of investors in Salesforce, as an example, is that they may not see the same growth trajectory as Salesforce may have. So there's a general idea or general scare out there for all softwares that can be easily replaced, especially the softwares that's backed by something called SaaS platform, SaaS. So SaaS is kind of this big, just giant, quantitative, call it database method, right? So again, you and I, we could probably access the old database based off, Microsoft, right? And build something similar. And effectively, a lot of these softwares are built on the prototype of SaaS. So any software that was built on a prototype of SaaS, again, is going to be obsolete, and they're going to be replaced with a newer version at a more cost-effective fashion. So that's why I said, even though it may be the same infrastructure, right, but the coding and the utility of that is going to be much more efficient going forward. So interestingly enough, whereas QQQ has gone up, the undertone of some of the tech names have actually gone down. So there's a split, and that's where our risk alarm goes off. So even though QQQ seems like there's a lot of momentum behind it, our recommendation is actually to take some money off the table and just put it aside. So because we have a 7.2% overweight and our investment in QQQ is up 13% from its bottom, we're recommending that we remove $380,000 of it, effectively half our position in the QQQ, and actually replace it with bonds. During the same period, interestingly enough, the 10-year as we started this year was right around 4. The 10-year U.S. Treasury today is actually 4.3%. So interest rates actually gone up. So it actually becomes a much more attractive time to actually buy bonds today than it was just 3 months ago. So it made a lot of sense for us to say, let's just protect our risk, right? We're not taking off the entire 7% overweight. We're taking off about a 2% overweight, and we're going to give it to bonds just to protect some of our profits. And at the same time, we eliminate the area that's most vulnerable in our portfolio, and that happens to be QQQ. So that's the only recommendation I have. And again, we have trimmed our overweight from 11% down to 7%. Now we're going to be to 5%. So we're going to slowly ease our way down. But again, risk management still is the paramount of our theme for this year.
You need a motion for that direction?
So yeah, I would appreciate a board's motion, and then I do have a copy for Jason to just sign off today.
Any other questions for Frank? If not, I'll take a motion to approve moving $380,000 from domestic equity and moving it into bonds.
So moved.
I'll
Second.
second.
Go ahead.
I'll second the motion.
Any other discussion? All in favor?
Aye.
Any opposed? Okay, motion passes. Thank you.
And as usual, we appreciate your vote of confidence. And again, as I alluded to, I certainly hope to come back with a fairly positive report for the quarter ending June 30th. Fingers crossed that we reach some sort of consensus or deal in the Middle East there. But otherwise, I will shut up here and see if anyone else has any questions.
Sounds good.
Okay, thank you, Frank. We can go ahead and move straight on to legal. Sugarman Suskin, David Robinson.
Thank you. So we have, you may already know, the legislative session closed without any laws being enacted that would impact this plan. So nothing on the state level to comment on as far as the legislative update goes. We are looking at all of our plans right now for, there was some changes to the required minimum distribution laws that were made by Secure 2.0 Act, and we're coming up now, it's in 2027 that public plans have to put that in, have to make any necessary amendments into the plan. So we're looking at that. We're looking at each plan individually and seeing whether or not there's any amendment that's required for this plan. So we'll let you know at the next meeting. We'll come back if we do determine that an amendment is necessary. We'll come back with a draft of the amendment. That's our report.
I did also have on the agenda to go over the financial disclosure form requirement, the Form 1.
Yes, I'm sorry, yes. July 1, of course, is the deadline. Please be sure to fill out your Form 1 before then. If anyone has not yet done it.
That's through the Department of Ethics. If you need a link to the website, just send me an email and I'll send you a link. Okay. And you guys have already filed electronically, so you won't have to recreate the wheel. You should be able to log back in and just update any changes.
Yeah, it's all pre-populated now.
Appreciate it, Dave. Thank you.
Thank you.
All right. Moving straight on to old business, there's none. Moving straight to the consent agenda, the summary of payment starts at page 40 of 52 on your tablets. And then from there, it goes down into warrant 24, and then finishing up with the fund activity report. Take a moment to look at those. Any questions, I'll be happy to answer. If not, I'll be looking for a motion to approve the consent agenda as a whole.
So moved.
Second.
Palmer, any other discussion? All in favor?
Aye.
Any opposed? Okay, consent agenda passes, thank you. Moving straight on down into staff reports, Foster and Foster. Just giving a quick update on the state annual report. We have filed that for you. We will hear back on what the amount that you get back, usually mid-August. So the meeting following that mid-August report, I will report back to you on what the amount is. Okay? And then moving straight down to educational opportunities, the two conferences coming up. The FPBTA Annual Conference, June 28th through July 1st, 2026. There is a QR code there. You may have been sent it by Steph in an email form, but if you want to sign up for it, it's right there, I think, in front of Jason. Please get signed up as soon as possible. This is the big one that is fills up quick. So I would really recommend that within the next 2 weeks, 3 at the most, that you try to get that at least registration booked and then your hotel booked. All right. And then the next one is going to be, I just put it on here, it's way out, but just for planning, I just figured I'd put it on here for you. The FPBTA Trustee School, September 27th through the 30th, and that's also going to be in Orlando. Okay, I'll have that on the next meeting as well, and I'll have a QR code for that one as we get closer. Okay. Any questions about the end report or the training classes? Okay, we'll move straight down into trustee reports, discussion, and action. This is where trustees can discuss anything that they can't discuss outside of here for fear of getting involved with the sunshine law that we don't want any part of. All right. So any discussion, anything we didn't bring up, or?
No, nothing new.
Okay. All right then, our next meeting, July 30th, 2026, is going to be at 2 p.m. like usual, and if there's nothing else, we will be adjourned.
Thank you.
Thank you.
You want these left up here?